I'm Eddie Cannell.
And I'm Tom Cannell.
We're the Mortgage Brothers team, and this is our show, everyone. We're right here in Phoenix, Arizona, and today we have a great announcement. We're following this up from an announcement that we gave last week. We just learned something new about FHA loan limits. Tom?
FHA, boy, did that sound weird? FHA. Boy, say that fast, FHA. FHA loan limits have increased, and I don't know if we said this last week or not with conventional, but this is like giving our borrowers a raise. This is a really, really big deal. So last week we announced that conventional loan limits had increased. This week we're announcing FHA loan limits have increased.
Effective January 1st, 2020.
That's right. So it really, Ed, tell me what you think. So here we are, early December. By the time this podcast comes out, it'll be still early-ish December. We could probably start an FHA file like within the next week.
Yes.
And still be fine.
Yes. If it's we could get someone pre-qualified. There's a procedure. It's ordering an FHA case number is what we would actually wait to order until January 1st.
Right.
So as long as someone's closing January 15th.
Yeah.
Close of escrow of January 15th in 2020 or later, we would be fine with these.
Yeah. So by the time you're hearing this podcast, we're going to be ready to help you with any type of FHA loan that you need that is within those new high limits. So what are those high limits, Ed?
Okay. So if you're a single family residence, if you're looking at a single family residence, that limit is now 300 and oh my gosh, where is it? 331,760.
Yeah, so 331,000. That's a big deal because it used to be,
and it was 314,827.
Right. So what did that mean for our borrowers from a purchasing price standpoint?
Okay, so FHA requires 3.5% down minimum. So for 2019, at the old limits, if you purchase a home for $326,000, you could put 3.5% down and be at the 2019 limit.
So,
now,
right. Okay, go ahead.
Now you can purchase a home at $343,000, put 3.5% down, and be at the 2020 loan limits. So $343,000. That's almost $18,000 more in purchasing power than last year.
Right. Okay. And the reason why that's a big deal is one of the milestones. Can you hear that phone ringing?
Yeah.
No. Okay. I'm just going to keep talking. So one of the reasons why that's such a big deal is because a lot of our FHA borrowers have the minimum down. So the classic call is, I have a credit score that's not real favorable in the conventional market. I know I need to go FHA. And I want to max out what I can buy. So, Tom, what can I buy? And I've always been limited to the $314,000 loan. So you take that old number, add the minimum down payment, then you were always capped at that number. So the 326. And I had multiple borrowers last year, or actually this year, say they were homes just out of their price range. They couldn't get a loan to secure a property more than that.
Right.
And so I guess what we're saying is the former $326,000 max home price is now $343,000 max purchase price.
Yeah.
So
a lot of people out there are probably wondering, well, okay, just remind me what the FHA loan is kind of about. Like, what are the advantages? Who basically is this loan for?
Mm-hmm.
When do we recommend an FHA loan? And just high level.
Yeah. Well, we always go to, credit and DTI. So credit's going to be your credit score. Typically anything above 700 leans towards conventional. Anything below 700 leans towards FHA. And what we mean by lean is there's better pricing. You have a lower monthly payment for an FHA loan versus a conventional if your credit score is below 700.
Right. Pricing, the interest rate the pricing is very good on FHA, even with the FHA mortgage insurance, which is mandatory. No matter how much you put down. But even with the mortgage insurance, the FHA is a great product for borrowers 700 or less.
Right.
Score.
Exactly. And we don't get into a lot of this, but also a very close second is debt to income. Our borrowers that have slightly higher debt to income ratios are treated a little bit better with FHA than conventional.
It's good.
And sometimes every little bit counts. So FHAs, this is awesome. We're very excited about this, and hopefully you guys are too.
Yeah. I'm going to mention a couple more things. You can have an unlimited number of medical collections, and FHA does not require them to be paid. So there's some things that they're very lenient on. That's one of them, medical collections. Another is the seasoning requirements, like the waiting periods. If you have a foreclosure or short sale, that's a big deal. It's only 3 years on an FHA loan, whereas conventional, it's 7 years on a foreclosure and 4 years on a short sale. So a lot of good reasons to go FHA for a lot of people, and that's why these loan limit increases are going to be helpful. Okay,
awesome.
What about now? There's not just single family residences out there. FHA will do loans on a 2-unit property, a 3, and a 4-unit.
Right. I didn't think that they did loans on investment properties.
So you have to occupy one of the units.
Right. Okay. So as long as you occupy as your primary residence one of the units, you can purchase a duplex, triplex, or fourplex using FHA. And we do those, quite frequently, actually. It's a wonderful way to get into your first home, typically, and start your investment portfolio.
So you want to go over those limits?
Yeah. Okay. So the loan limits for the 2-unit is going to be $434,000, and this is stuff that literally just came out today. So these may tweak a couple $100, give or take. So give us just a little bit of leniency if for some reason they're not exact. But 2-unit properties have a loan limit of $434,800. The 3-unit has a loan limit of $513,450. And the 4-unit is $638,100. So you can,
No, you were just going to say it, I think.
So you can buy, a 4-plex for almost $650,000 using FHA.
Just 3. You can buy that 4-plex, live in one of the units, only put 3.5% down. That's awesome. I mean,
it is awesome. And just for giggles, I don't know if we do math while we're doing this show, but for just giggles, I was going to do the down payment, $638, 3.5. So for $22,000 down payment, you can max out a 4-plex.
Yeah,
almost $650. So there's a lot of investors that are probably drooling, saying, I wish I didn't have a primary occupancy already because I'd love to do that.
Yeah.
Okay.
People have started their, a lot of first-time home buyers have done that. It's one of their ways of how they actually get into real estate.
Mm-hmm.
And they let the other tenants on these other units that they have pay their mortgage.
Right. Right. Awesome. All right. What else? Anything else?
I can't think of anything. We'll keep you guys informed. And of course, always let us know if you have questions. Email us, call us. We're here to help.
We're local. We're here to help you anytime.
That's right, everyone. Have a good week.
Okay. Thanks, folks.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.